Hey guys, welcome once again to the Trader Zone. My name is Ray.
And I'm Sabrina. When you look at a currency chart, one of the first questions that you ask yourself is, what is the predominant direction of the market? To arrive at this answer to this very important question is that we first look at our charts. This process is called technical analysis. Technical analysis is a skill acquired, and for some it can take years and others a much shorter period of time. The Mastermind Forex training course provides a framework for you to start building your knowledge and skills in analyzing Forex charts.
One of the first steps for a new trader is to become skilled in understanding what the currency is doing rather than trying to predict what it will do. Instead, as a new trader, you should obtain a firm understanding of where prices are and assess where trading opportunities will be. Projecting currency prices is really constructing a map of possible route that the currency can actually take. The effective trader will then develop strategies for each possible outcome.
The geometry of price action reveals what kind of pattern the market is establishing. Understanding patterns leads to an understanding of what the market is doing. Understanding what the market is doing leads to formulating trading strategies, and once you've grasped the knowledge of price movements, you will eventually find yourself consistently making money. To learn more about what we do within Mastermind Traders Academy, visit our website by clicking here.
We created the Trader Zone YouTube channel not only to provide comprehensive market analysis each week, but to provide you with insight as to how we approach the market week after week on a technical level. You see, when you really break down the market into its simplest form, prices only move in three basic ways: up, down, and sideways. There are only two possible outcomes, and that's either the trade takes us out in profit or it takes us out in a loss. Lastly, we as traders have three possible options: we buy, we sell, or we stay out when in doubt. The aim for any trader is to be consistent, be better traders, and be profitable.
With that said, let's find some trading zones for the upcoming days ahead. This week we will focus on the US yen, the New Zealand dollar, the Euro yen, and the Aussie New Zealand. Currently, there are not many trading opportunities this week as the market ended in a very erratic state. First up, we will start with the US yen. Last week, we discussed this pair and mentioned price would hit 102.60 resistance zone. Before I go further, for those who have been following since August 28th, we made it clear that we were targeting 105.50 resistance zones and we would look for buying opportunities on the pullbacks. Looking at the daily time frame, price has hit a critical resistance level and has formed a bearish engulfing candlestick pattern. This means we could see some price rejection back to the support level. A pattern we do not come across very often is called a Gartley pattern, and I'm expecting this pattern to emerge in the next few days.
Price is currently at 102.86, which could hold as a support zone. Our outcome of this pair is to expect a rally back to 103.40.60, which is past support area, where we could see price rejection and a continuation of the downward trend to around 101.50 level. Therefore, at 103.50, 103.70 level, we could look for a sell signal with a stop loss above 104.30 and a profit target at 102.40, first level of support. A break below this level could push the pair further to around 101.90, 101.70 support level. Now, if price hit this level at 101.50, we could look for a bullish signal with a stop loss below 100.65 and targeting 102.75. Moving over to the New Zealand dollar, we made out like a bandit last week where we had a sell position at 0.7195 with a target at 0.7090. Price came close to our target, which we exited, and now we're expecting further extension of a fall, but we would like to see a pullback to 0.7260 with a stop around 73.20, and we'll be targeting 71.20 support levels.
Now, if we head over to the Euro yen, this pair is fairly bullish and we can expect a further rally of this pair over the next few days. Looking at the daily time frame, we can see a possible inverted head and shoulder pattern with support at 114.20. Moving down to our smaller time frames, such as the 1 hour, if price should fall within this area of consolidation, we could set a buy pending order at 114.20 with a stop at 114.50, targeting 115.20. Now, scenario number 2 could be that if price holds at this current support level at 115.20 and begins to rally, we would want to see a break and close above 116.40. At this time, we would look for a pullback to 116.20 to go along with a stop below previous lows of 115.67 and a target zone of 117.55.
Moving over to the Aussie New Zealand. Now, this pair has been in an uptrend since early September, but has hit a level of resistance at 1.06 psychological resistance level. Now, on our daily chart, we see a bearish engulfing candle, which signifies a trend reversal. Moving down to the forward time frame, price is at support. We would like to see a break and close below 105.70 before executing a sell order to the next support level at around 104.90. This is supported by bearish divergence on our MACD and also seeing a double top being created at the resistance level.
Thanks for watching, guys. If you find these videos helpful, please give us a thumbs up and subscribe for future videos. Again, these are just our market opinions, and we encourage you to do your own individual analysis, which we'd love to hear about in the comment section below. Happy trading this week, guys.